Deepak, can you call him once?
I've called him. He's joining in 1 or 2 minutes.
Is still our test of industry tax going on at website?
No.
Because some of the participants are requesting today. So I will request on your behalf to Deepak ji. If he allows, then you can appear.
What we can do when we have IFRS test, so that day we can allow. If I don't know, it will be difficult for them for appearing 2 tests in a day.
So can you allow 1 or 2 more days? Is it practically possible?
Yes, we will. We can allow.
Okay. Although you already allowed 2 days extra because it is on 3rd May only. It was 3rd, 4th, and 5th. 2 days extra we have
No
allowed.
issue. Actually, I have also got many queries from the participants. They were also asking to allow for the test, and they were also wanted to appear for the test. But since I have stopped it, so I have not said anything. So we can allow for this week as well.
So as for
Sanjay sir, can you hear us now?
Yeah, very
Good,
clearly.
good evening, sir. Good
Good
evening.
evening, Ji. Good
Your
evening.
Good
photo is
evening,
not
sir.
coming.
Good evening, sir.
Good evening,
Now,
Sangam. कैसे हो? हाँ जी.
All good, sir.
now it's coming, sir.
Sir, we will start in next 2 and 3 minutes, sir.
ठीक है, no problem.
Yeah.
ठीक.
Sir, I want to inform you that, sir, recently we have conducted one series of international taxation, sir. 8-day course of international taxation that was viewed by, sir, more than 20,000 views on the videos on that course, sir.
Excellent.
And sir, we
Congratulations.
also conducted a test over that series that was held on 3rd of May. Around 500 participants appear in that exam, sir.
Wonderful.
On similar fashion, sir, we have designed this course of Ind AS, and now we are also going to have a test over this, sir. And those who qualify the test will eligible to get certificate from our organization, sir.
अच्छा, you are having a test also?
We are conducting test on Studycafe, and for international taxation, we conducted test on 3rd of May. So those who have passed with more than 40% marks, they will get certificate. And for IFRS also, we will conduct test on I think on Sunday, coming Sunday,
16th of May.
16th of May, and those who will clear the test with the minimum 40% marks, they will get the certificate.
Okay, very good.
And from day after tomorrow, we are also starting one course on Excel. So there I will take 3 days Excel training for all our participants those who will join.
Excellent, excellent, excellent.
So on IFRS course, we have got around 3,000 registrations. So we have done 3 series. One on international taxation, that was our first series. Then on we have done it for I3rd. This is all going on. IFRS is going on, and once it will be completed, we'll start one series on Excel. And before that, yesterday our institute came for the deliberation on Ind AS 21 and foreign exchange payments. So webinar as well.
Just permit me one minute. I'm going to switch my network because this is giving me a problem. So I'll just switch to.
No issue, sir. No issue.
Just give me a second, huh?
Yeah.
Your query is not clear,
Yes.
Sandesh sir, we have 2 and 3 requests with you, sir, before starting the session, sir. One, we have a 2 options, sir, Q&A and chat box, sir. Whenever if you want to make the session interactive, sir, you can ask some question to your participants, sir. Very small question, very easy question, so that they can feel participant. Because in webinars, sir, if you will speak 2 hours continuously, so might be it become monotonous sometimes, sir. So you can ask some question, they will revert in chat box, sir.
So I have questions.
No, just basic question, sir. When you something, yes.
No. In my presentation, I have those questions.
Okay.
So maybe I can then pause there and take a response and then give the answer.
Yes, sir. Yes, sir.
And the participant will write their answer in chat box only, sir.
No, let me ask from sir. Sir, you want to like interact with 2 things, chat and Q&A, or let's continue with the chat? They can reply in Q&A as well. So I think Sangamji, we can go with only one option.
I think whichever is more convenient.
Both are convenient for the participants. So chat box we can disable for the participants.
Yeah,
and,
that's okay then.
Q&A, they will be able to revert for your queries. Whatever queries you will ask, they will revert on Q&A.
Q&A only.
Fine. Okay, great.
And sir, Sanjay sir, second request is that, sir, our participants are from all over India, sir. Some are from North India also. So if you explain any important provision and after that is repeat in Hindi, it will be beneficial for all the participants, sir. Because we are getting this kind of feedback, sir. Okay, our session are going to in typical English only, sir. So some participants are feeling not comfortable with that, sir. To take your lecture in complete English as per your comfort language, sir.
No. I'm okay. In fact, why I'm a little amused is because in the last seminar I had, webinar, I was specifically asked to speak participants from other than North India. So they said we will not. So I will make sure that I speak both in English and Hindi. Okay.
Yeah, you speak because many participants are from South as well. So it's our problem for us as well. Like, we cannot avoid North participants and we cannot avoid South participants as well.
No. I think the webinar is that the entire country is integrated, So, okay.
So you can start.
Yes, Sanjay sir, your voice was not little audible. So, Sangamji, are you also facing that problem, or
I am also facing.
Is it okay now? Is
yes,
it okay
sir, it's
now?
okay now. Yes.
Might be there's an internet issue that becomes.
Yeah. So So anytime you feel during the session, if the voice is not okay, just let me know, okay?
Okay, sir.
Okay, sir.
And then I will repeat that,
Okay, sir.
because
Also, sir, there
you
is
know how it.
yeah. Pardon,
Yeah.
sorry, sir.
No,
Sorry.
because the connection, keeps on. You know how it is these days.
Yes,
Yeah,
sir.
no issue, sir. No issue.
No issue. And
Okay.
sir, there is an option to share your screen also at bottom, sir.
I know. I know.
Yes,
I
yes,
will.
okay, sir.
I will.
Okay. Dipesh, so
Whenever
I
we
will request
start,
you
because
to
I have
Yeah, I'm
my
just
presentation.
okay. We'll start it. And one more request, sir. After presentation, please share your PPT with us because participants will require that PPT.
Yeah. So
So
Anupam will share that with you,
okay,
right?
I'll ask
Okay.
from Anupam.
Yeah. Yeah.
Okay, sir. Yeah. So, sir, with your due permission, can we start?
Yeah. Yeah. And just let me know that the time is till 8 o'clock, right? Is
Yes,
See,
how?
from our side, if you can continue till 8:30, there is no bar. If you are free after 8:30, so ideal time that we have set it's for
Mhm.
6 to 8. But during our past experience, we have felt it just goes till 8:30. So if
Okay.
you do not have any commitments after 8, you can continue. It's your wish. If you
So
want to
maybe
wind
by
up,
8:15, because I have some call. So I'll try to
no,
finish
no
no,
by
issue,
issue,
sir. No
8:15.
issue.
no
It's
issue.
your
Okay.
wish.
Fine.
So if you can wind up at 8, then also it's fine for us.
Fine. Okay. Great. Thank you.
Welcome, sir.
Thank you.
Now, let me start our today's deliberation. Hello, friends. Good evening, everyone. Good evening, all our participants. And I welcome CA Sanjay Vasudevaji, CA Sangam Agarwalji. And friends, today is the seventh day of our 8 days webinar
दीपक
series.
जी, ऐसी
Yes, sir.
वासुदेव जी हमारे साथ हैं, उनको वेलकम कर दीजिए प्लीज.
Yes. And sorry, sir, I didn't recognize you. So I welcome SC Vasudeva ji as well. And Sanjay ji, I think there are two persons. So if you can tell me the name, so I can welcome both of them.
Mr. M.M. Khanna.
And I will also welcome Mr. M.M. Khanna ji as well. And my dual apologies that I'm not able to recognize, sir. And I welcome all our panelists who are available here in our webinar. And friends, this is the seventh day of 8 days webinar series. And till 6 days, we have successfully conducted many, completed many Ind AS. And today we will take asset-based standards Ind AS 16, property, plant and equipment Ind AS 40. For that, we have CA Sanjay Vasudevaji, who will give the deliberation and elaborate these two Ind AS. Sanjay Vasudevaji is like past Central Council member. Everybody knows that. So more details about sir will be given by the Sangam Agarwalji. Now, just want to remind you, friends, we have two webinar lined up in coming week. One is on the this
Art and living.
Art of Living, which is scheduled on Friday morning 11 to this thing 1 11:30 to 1 it is lined up, and there it is we have aligned it with the Art of Living Foundation, which has been founded by Shri Ravi Shankar ji. So it's a 1.5 hour webinar on the stress management. So request you kindly join it, because we chartered accountants, we always care about our clients. We do not care about our personal health and our personal mind and everything. So we have taken this initiative to bring something new on Friday, Saturday, or Sunday. So considering that we are organizing this webinar on art of living topic. So that is going to be very good session. And from 12 to 12:30, Ravi Shankar ji will be live from his YouTube channel on and on our webinar as well. So we can take the benefit of him as well. Now, I would like to remind you for our another webinar, which is also going to start from Friday. 3 days course on Excel certification. That course is also 3 days course, and the details of the same we have already shared it. Link of both the webinar I will share in our chat box. All the PPTs has been uploaded on our website studycafe.in. Every participants can download PPT from our website, and today's PPT also we will upload on studycafe.in. Now, without taking much time, I will hand over it to Sangamji to give brief introduction of Sanjayji.
Thank you, Deepak ji. Good evening, friends. Myself, CA Sangam Agarwal, and I express my sincere welcome and thanks to CA SC Vasudeva ji, who is our past president of ICI, past Center Council member of ICI, and CA MM Khanna ji, who is a very renowned faculty. Sir, I express my sincere thanks, sir, for coming on this platform and share your knowledge. Thanks to all the participants, because participants are backbone of any webinar or seminar. So around 200 participants are joined us on through Zoom, and around 100 participants are through YouTube. So I express sincere thanks to all the participants. And friends, it is our proud privilege that past president of our ICI is with us to share his word of wisdom also. So before going to Sanjay Vasudeva sir, I request SC Vasudeva sir to give his word of 2-minute word of wisdom with for our participants, sir.
Thank you, Mr. Sangam Agarwal. I would like to correct you. I was never a president of the institute. I was only a Central Council member.
Okay.
And Mr. Khanna also is the next Central Council member.
Okay, sir.
I was chairman of the Accounting Standard Board for 3 years. That was from 2003 to 2006. What Sanjay is going to speak about the, this property, Ind AS with regard to the property and other assets. Thank you so much.
Thank you, sir.
Thanks a lot.
Please go. Yeah. Dear participant, as PP is very common in nowadays in COVID-19 era, and PP is also important for the Ind AS 40 also. So today we are going to discuss Ind AS 16 and 40 belong to PPE especially. Property, plant, equipment basically, sir. So I will not take much time and reading the brief profile of Sanjay Vasudeva, sir. Sanjay sir is basically as qualification of his BA honors and fellow member of ICI. He also completed DISA from ICI and diploma in international Ind AS from ICI. He has a experience of more than 25 years in accounting profession in area ranging from statutory audit, internal audit, Companies Act, and FEMA, and currently a senior partner with SC Vasudeva and SCV and Company, known as SC Vasudeva and Company, has worked involved in the audit of corporate and non-corporate clients and various nationalized bank and a foreign bank. Was elected as a member of Central Council of ICI for the term 2019. Sir, as various committee of ICI during such tenure include Chairman of Financial Reporting Review Board, the Vice Chairman of Auditing and Assurance Board, Vice Chairman of Ind AS Implementation Committee, Vice Chairman Digital Accounting Assurance Board, member of Corporate Law Committee of PhD Chamber of Commerce, currently a COP member of the Research Committee of the Chartered Accountant of ICAI. He is also other position at held past at ICI, IFSI member body, etc. Friends, although he is a very learned person and have member of almost all the body which generally deal with the accounts and auditing standard, he generally member of all the international bodies also. So I will not reading each bodies, but you can know he is very experienced person. So I am not taking much devote much time over that thing, and I request Sanjay sir to start today's deliberation and hand over to Sanjay sir.
Just 1 second. Just want to remind you that, friends, our moderator of session, Pratibha Goyal, is also with us. So she will compile all the queries which we receive here on the Zoom as well as on the YouTube, because we get many queries. So we do not want to repeat the queries. So we will compile the queries, so it will be easier for the panelists and speakers to reply only one query once. Now over to you, Sanjay sir.
Good evening, friends. Good evening, Deepak ji and Sangam ji. Thank you very much for giving this opportunity. All the participants do wish all you are safe and taking care. I'm also privileged that Mr. Vasudeva and Mr. Khanna are also there on this session. So the COVID-19 has struck all of us pretty badly. All of us are under lockdown, have been under lockdown situation. But on the positive side, I think it has brought forth the aspect about webinars and the reach which technology can have across the country, not only across the country, but across the world. So I think this is something which is a very, very positive development. And as you have said today, that if I am speaking here, there will be participants in South India, there are people in North. So recently also addressed where there were Eastern region, Central region members, and that was never thought about earlier. So I think these are positives which we will carry with us as we move along. The world will will learn to live with COVID, and we will also learn from this. So again, thank you very much, and greetings to everybody. I will be speaking on two standards, very important standards: the asset-based standards, the property, plant, and equipment, which was earlier called the fixed assets standard, and investment property, which we did not have a standard erstwhile IGAP. I will try my best to cover all the concepts, and hopefully all of you, whosoever is attending or learning India's for the first time, would be able to get familiar with the concepts. And I'll also try my best to address all the queries to the best extent possible, barring if there are certain things which we are not able to address for want of time or for complexity. We will definitely get back to you. So what I will do now is I have my presentation. I will share the screen now so that I can open the presentation. Would that be okay, Deepak ji? Can we go ahead?
Yes, sir. Yes, sure.
Okay, okay. Okay. So I will write with and want to chat or the Q&A. You're able to view the presentation?
Yes, sir. We are able, sir.
If you can do the full screen, it will be great. Otherwise, this will also. Yes, now it's
fine,
better.
sir.
I have done full screen. I've done full screen, but I'm just trying to now see where the Q&A will come in.
At top, sir. At top.
At the top, there are 4 pending is coming. So we are trying to reply from our side, which are not relevant to the topic. Rest we will leave it for you.
Okay, okay, fine. It's coming. Okay, fine. That's fine. Okay, so friends, we will be talking about Ind AS 16 and Ind AS 40. So essentially, if we just get an overview of what been brought in, standards were the date of implementation 2011, which was moved to 2016 with the earlier balance sheet of 2015, and the fixed asset standard, which was the one which was changed to Ind AS to bring it in line with IRS, which is IAS 16. The major changes were one, it brought in a concept of fair value, it recognized fair value and permitted the recognition of the property, plant, and equipment to fair value. Then the nomenclature changed from fixed assets to property, plant, and equipment. And it brought in very, very clear concepts on recognition, derecognition, measurement, impairment. And also the depreciation, which was a separate standard, was brought in into this standard itself. The investment property standard, there was no investment the new standard which came in.
आपके लेवल पे सर नेटवर्क का इशू है सर संजय सर आपके लेवल पे सर नेटवर्क का इशू है इफ यू क्लोज योर वीडियो ना सर देन इट विल बी फाइन सर नेटवर्क क्वालिटी विल improve.
Okay.
Yes sir, now try to speak sir.
Okay. Me?
Yes sir.
I'm audible now?
Yes, audible sir.
Achha, my apologies. I tried, all these days different networks and we are having a lot of problem. Okay, so I was talking about investment property. There was no standard specifically for investment property. So this was a new standard which was brought in to reflect the requirement for properties which were in the nature held in the nature of investment. In fact, if you look at across Southeast Asia, across Singapore, Hong Kong, and these countries, and fairly developed countries also, the large properties which were held in the form of investments or ones which were let out or for capital appreciation, thereby there was a necessity for having a separate standard. So we'll discuss what that standard really prescribes. So the just one second. Yeah. So this is what the standard. So the first standard we will cover is Ind AS 16, and just one second. Just one second. Yeah. So these are the aspects which are there in the standard, which we will cover. The objective, why the standard was brought in, the definition, key definitions which are important. Again, as I mentioned, recognition, measurement, depreciation, derecognition. We'll cover some questions also. And another important concept about changes in decommissioning and restoration liability. So these are some of the things which we will, and we'll also look at a practical example or a disclosure, because I remember Deepak ji wanted that I should take up something. So I have taken up a balance sheet of an entity where we'll go through the disclosures and we'll be able to perhaps see what actually the standard is prescribing and how companies are using that. So clearly, let's just go to the objective. So the objective is to prescribe the accounting treatment for PPE. What are the principal issues in accounting for PPE? First is the recognition, then determination, what is the carrying amount, depreciation, and impairment, how impairment. So there is a separate standard of impairment, but there is a reference here in terms of impairment losses to be recognized. And why this is important is so that users can discern this information in terms of understanding what value the property, plant, and equipment is in the balance sheet. What is property, plant, equipment? Is fixed assets. There are vehicles, there are buildings, land, plant and machinery, all office equipment. This is property, plant, and equipment, commonly known as property. In fact, incidentally, the accounting standard in India, accounting standard 10, has also been modified, and it has been brought in line with Ind AS 16. Ind AS 16 is on the lines of IAS 16, the International Accounting Standard, the IFRS. So those are the broadly, these changes have also now been brought into the accounting standard, which is applicable for non-Ind AS companies, which don't have to converge to Ind AS. So this applies to property, plant, equipment, except where any other standard requires or permits a different accounting treatment. So if you look at the leases standard, the leases, you would have gone through that, I believe, in the earlier session, and you would have also understood that there is a right to use asset, and there is a different criteria there as far as recognition is concerned, because you need to determine lease, you need to see if there is a control from that perspective. So if what this standard says is that if there is a different criteria for recognition in any other standard, then that would apply. So it's also, whenever we are looking at the applicability, it's also important to understand what it does not apply to. So it does not apply to PP which is classified as held for sale. There is a separate standard. Again, there was no standard earlier under the erstwhile IGAP. There are biological assets other than bearer plants. So there is a separate standard, Ind AS 41, which is on agriculture, where you have livestock and other agriculture assets. We'll cover bearer plants here. The exploration and evaluation assets, which are for mining and exploration of oil and other, which is 106, and mineral rights or reserves. So there are rights, mineral rights, you have mining rights for natural. So all those are covered separately. But if there is a asset which is used for the exploration and evaluation, for instance, you have drillers, you have other machinery, or you have right to intangible assets in this respect, all that accounting is done under Ind AS 16 or under Ind AS 38 intangible asset. So this is what is important to understand here. Uh, some key definitions we'll cover, and then maybe I can take a look at some, just go forward, and then maybe we can take some questions. So what is property, plant, equipment quickly? These are tangible assets. Again, asset definition you can take from the framework. An asset is taken from there, and tangible asset and intangible assets is distinguished. PP covers tangible assets, are held for use in production or supply. So please note the term use, because I will just refer to that again. Are held for use in the production or supply of goods or services. Normal plant and machinery is what is used. Land and building could be obviously an asset. For rental to others, for administrative purposes, and obviously are expected to be used during more than one period. Now, this period is not specified, but technically one could look at more than a year. Administrative purposes is for offices and for other administrative purpose. For rental to others. Now, a question which I'd like to ask here is that if you have an investment property standard which again covers rental, what could be the property, plant, equipment which is held for rental? So if we can get some replies there, can I open the Q&A?
Yeah, friends,
So
you can
somebody
reply in the Q&A. What sir is asking. So Q&A is open for all of you.
I've received input that I need to.
Please increase your voice little bit as well.
Yeah, I received that. So I will be louder. Yeah. Yeah. So here, other than land and building, will come here. So if it's plant and machinery which you have um, rented out, will be covered in this standard. But if it's a land and building, it will be covered under the investment property standard. Very good. I received that reply. That is what I was looking for. So we'll move ahead. This is the tangible assets. I hope I'm loud enough now. Deepak ji, are you able to hear?
Yes, sir, I'm able to hear, but on YouTube, sound goes little less than what we receive it on Zoom. So
Okay.
I don't know if possible, little more louder. Otherwise, it's fine with us. On the Zoom, it is
Okay,
clear.
no. I can be louder. I think.
Now it's better. Now it's
No,
better.
yeah, that's fine. I'm
Yes,
not
yes.
used to being so loud. So, but it's okay. But if the situation so demands, then I can be loud. Yes.
Now it's
Uh,
fine.
okay. So let's look at. We saw that it does not cover agricultural. The agriculture, but it covers bearer plants. So what are bearer plants? There are some photographs which you can see. These are plants where they're used in production or supply of agricultural produce. So these are, so let's say tea, plant where you have tea leaves, you have coffee production, you have wine, so grapes and all, which are, so the bearer plant by its very name means which is going to bear the agriculture produce. So that comes under the this standard. But the agricultural produce, or let's say wheat, maize, which you grow and you're going to sell immediately, or you have garden plants or something, those are not covered here. Then what is cost? Again, all of us know, but then it covers cash and cash equivalents paid, or the fair value of consideration. So you may have a situation where an asset is acquired in a business combination, another manner, or there's a fair value. Fair value you've already studied under 113. If that is there, then the fair value will be taken to be the cost for this purpose. Or if there is another attributed to that asset. So let's say you have, again, you would have studied the share-based payment standard. So if there are shares which are issued for the purpose of a property, plant, and equipment, then the value which is ascribed to that, the fair value of those share consideration, could be taken to be the value for the property, plant, and equipment. If in fact so that would have been covered under the Ind AS on share-based payments. Again, fair value, I will not go into too much detail except saying that you would have studied the fair value hierarchy. So there's a level 1, level 2. So level 1 are those where an active market is available. Level 3, where it could be where the value is derived through cash flows and all. Depending on, so you are selling a property, plant, equipment, you could get a level 1 or a level 2 input. Uh, so again, this is what is fair value. Depreciable amount is the amount, the cost of an asset, or the other amount substituted for cost less its residual value. So again, what would my question to the participants would be, what would be this other cost substituted or other amount substituted for cost? So can I have some answers on that?
Yes, you can reply in the Q&A as well as in the chat box. Chat box is also open for you. And sir, can you please repeat the question again, because last time also participants were asking, they were not able to understand the
Okay,
question.
I'll be louder. The cost of an asset, depreciable amount, cost of an asset or other amount substituted for cost, less its residual value. So what would be this other amount substituted for cost?
You can see that in the chat box there is a lot of reply coming, sir.
Yes, exactly. I have received one, the fair value, revalued amount. Yes, that's correct. So because of the fact that the revalued amount or the fair value will be substituted, so depreciable amount to that extent, the cost will increase to that extent, less its residual value. Again, useful life, all of us are aware it could be the period over which it is. So useful life is different from economic life. Useful life would be entity specific. Normally, if you go to schedule 2, then you will see the useful life from there only, which is prescribed there. But the standard also permits a way in which a number of production or similar units expected can be obtained from the asset can be taken to be the useful life. For instance, if let's say in a hospital you have a machinery, a medical equipment which is expected to do so many tests. So let's say it can do 100,000 tests. Now that will then be seen into how many it can do per day in a year, and the expected life can be taken from there. So the useful life which is given under schedule 2 is normally used, but there you could use a useful life which is based on your own assessment also. Okay, residual value, again, very important. Residual value is the value which is left at the end before the disposal or at the disposal of the asset. Now, it's if you look at the definition, it's very interesting that the residual value is the estimated amount that an entity would currently obtain from disposal of the asset. Currently obtain, which means you have to see that what is it. So supposing the asset which you have is going to last for 15 years. After 15 years, so if there is an asset, you will have to see that the asset is at the stage and level at which it will be after 15 years. What would be its value today? So it could be a plant and machinery, a sugar let us say a boiler, if its life is 15 years, what would be the residual value today for that? Is what is the residual value? A carrying amount is again the amount at which asset is recognized after deducting accumulated depreciation. Depreciation, we will see in more detail the allocation of depreciation amount. Impairment loss, where the amount exceeds the recoverable amount, and that again is value and use and the net selling price, the differential. So these are some of the important definitions. Now we come to an important aspect in terms of recognition of assets and determination of carrying amount. Now, if you recall in the earlier standard, which is AS10, you could, so first let's look at what is the cost. The cost, and I'll come to AS10 again later on. Cost is recognized. There are two conditions. One, that it is probable that future economic benefits associated with the item will flow to the end, which means that you will use it to gain cash flows, you will gain profits, you will gain income from that. So your plant and machinery, your land and building, together with the plant and machinery, whatever you have is going to give you future benefits. It's going to your revenue is going to be generated, and the cost of the item can be measured reliably. So these are the only two conditions for the recognition of property, plant, and equipment. Now, I was just referring to the earlier standard. The earlier standard, talked about after the initial recognition. So let us say you had a hotel room which you had furnished. Now the hotel wants to refurnish that. You had to demonstrate that if that refurbishment or renovation could add to benefits which were more than what were there earlier, you could then capitalize the additional expenditure. Now, these two conditions are the only one which need to be satisfied whenever you are going to capitalize. In fact, this is the principle which can be used anytime and every time to see if it has to be taken to be a PPE and the expenditure needs to be capitalized. There is now no requirement for there being an additional benefit being generated. The only thing which one will need to do is to capitalize and decapitalize. That is what this standard mentions. Again, very importantly, spare parts, standby equipment, and servicing equipment. If they normally treat as investment unless there are major spare parts. So you could have alternative generators, you could have alternative equipment which are to be used together. They will be capitalized if you are going to expect to use them for more than one accounting period. We saw that in the definition also as far as the property, plant, equipment was concerned. Again, the standard does not talk about going down in terms of aggregation or disaggregation. You could combine different for instance, you have surgical instruments, you could combine them together to form one group. You also have a situation where you have component based accounting. So it does not prescribe a unit of measure for recognition, but that depends on the entity how it is going to define that. Uh, Again, this just summarizes the accounting treatment for spare parts. So if there are major spares, let's say insurance spares, which are expected to be used for more than one period, then they will be recognized as part of that asset and then depreciated over their useful life. If it can only be used with a particular asset, so there are spares which can be used. So there are large plants, so these can be used in different parts of that machinery, which are forming part of that plant. Then they can have their own depreciable life depending on the useful life which is prescribed under Schedule 2 or what the company assesses. But if there are spare parts and servicing equipment which can only be used with a particular machine, so it will then be depreciated over the existing useful life of that related asset. So if you are going to bring in that spare plant and the remaining useful life is, let's say, 5 years, then it will be depreciated over those 5 years. And other than that, these are expensed off as inventory or unused items. So here is a question. A company has a spare part which it terms as insurance spare is required to be used along with equipment. Whether spare part is required to be recognized as part of that equipment, and whether depreciation is required to be calculated separately for that spare part along with the equipment for which it has to be used. So let's look at the Q&A and let's get the answer.
Just please revert in the chat box.
Okay, chat box. Should I look at the chat box?
As of now, I have not got any answer. Maybe you can repeat the question, sir.
No, I've received the answer. I've received
Yes,
the answer.
component based.
I've received. So I'm repeating the question. The question is कि एक कंपनी के पास स्पेयर पार्ट है जो इंश्योरेंस स्पेयर है वो यूज हो सकता है सिर्फ उसी इक्विपमेंट के साथ उसमें आप डेप्रिशिएट कैसे करेंगे अलग करेंगे या उसके साथ करेंगे so let me see if we get the answer. Okay, so I've got the answer. It will be done in accordance with the life of the main asset. Great. So let's move ahead. In fact, I saw a couple of other questions in terms of residual value. Very interesting, and I'll quickly just take. I think it was that can residual vary from 5%? We tend to take yes, it can, but then you need to have so schedule 2 lays down that it cannot be lower, but it can be higher. Is what I believe. But in any case, you have to have a rationale for that. You have a technical assessment for that. But normally, yes, you're right. We take 5% as the residue. It's not the residual value. Okay, so now what are the costs to be included for recognition? And let's look at some initial costs. In fact, very importantly, the standard talks about enabling costs also. So there could be, so right now we're trying to see what will form part of the cost for the property, plant and equipment. Now here is the situation. What the standard says is that if we see acquisition of such property, plant, equipment, although not directly increasing future economic benefits, may be necessary for an entity to obtain future economic benefits from its other assets. So which means that it is not directly related to that plant and equipment, but it could be necessary to obtain. So what could be that situation? Let us look at the example. So there is a chemical manufacturer, and this example is coming in the standard itself. A chemical manufacturer is installing a new chemical handling process to comply with environmental requirements for production and storage of dangerous chemicals related plant are recognized. So this is recognized as an asset because without them, entities are unable to manufacture and sell chemicals. So the point which is being made here is that though it is not forming part of that plant which is going to manufacture the chemical, but this new chemical handling process is required to comply with environmental requirement so that cost can be loaded on to the chemical manufacturing plant because that there is a prerequisite for that to enable you to produce that chemical. So this is what this standard does. In fact, this principle is very useful. In fact, when I was part of the expert advisory committee, we used to have a lot of queries under the erstwhile accounting standard, whereby they were enabling assets and expenditure which was incurred. For instance, I remember one where there was an expenditure on a dam. So there is a dam, a company which is a hydro power company was setting up a dam, and it had to clear up the forest area spend money to be able to approach that. Now, under the earlier standard, you could not capitalize that expenditure because it was not related directly to that asset. But now this standard enables that you can, there is an enabling expenditure which may not directly used for this asset, but it is a prerequisite for setting up that asset. So that expenditure could be capitalized. So these are some of the what happens to the subsequent costs. So obviously the day-to-day servicing costs will go under repair and maintenance. Interestingly, there is a concept about replacement cost also in this standard. So replacement costs, as I mentioned earlier, can be capitalized uh, if recognition criteria are met. So you will recall at the beginning I had said that there is only two things which you require. One, that it should be measured reliably and it should add to the future economic benefits. So those are the recognition criteria. We'll see some examples. And the carrying amount of those parts are replaced, and there is a derecognition which takes place. Also similarly, major overhauling, all these costs the standard requires to capitalize. So if those of you who have been auditing or perhaps working at manufacturing companies, or let's say steel based, you would have seen the furnace. In those cases, furnace, there is a the surface needs to be relined. So there is a replacement which needs to be done. In let's say there are hotels. So there, as I mentioned earlier, the entire let's say the rooms need to be refurbished. Now all these costs, because of this requirement or this aspect in the standard, can be capitalized if the recognition criteria is met. Uh, Major inspections again. So you have large industries where you have tank inspections. There are sometimes chemicals which are kept. There will be ships, aircraft. There is a dry dock inspection. In terms of aircrafts also, there are major inspections. All these can also be capitalized. And we will see, in fact, one of the industries, the balance sheet I will show you, it appears in the balance sheet as a capital expenditure, and any remaining carrying amount is derecognized. Again, let's come to a question. So here is a company which is engaged in, I'll read it out, refining of petroleum products. It has a captive power plant with gas turbine generators. There are various components of generators which need regular overhauling. uh, Critical parts of generators are exposed all the time to very high temperatures, leading to fracture of these parts. As a result, at the time of such overhauling, these parts are required to be replaced. Certain servicing charges are also incurred at the time. How should such planned overall costs be accounted? Okay, open for Q&A. एक कंपनी के जो रिफाइनिंग पेट्रोलियम प्रोडक्ट्स में है, उसके अंदर कुछ रिप्लेसमेंट होती है, कुछ क्रिटिकल पार्ट्स है जनरेटर के जो रिप्लेस होते हैं, सर्विसिंग होती है उसकी एट द टाइम ऑफ ओवरहॉल, उसको कैसे अकाउंट फॉर करना चाहिए? So if your questions which are separately from my request is from what I'm speaking at, that we can take towards the end, right?
So we are getting answers in the chat box.
Yeah, I'm seeing. Okay, so I think some of them have answered partly. So as we can see, there are critical parts of generator exposed. So these parts, when they are replaced, you will capitalize. And if there's a major overhauling which is done, then also you can capitalize. If there is a normal part which is servicing and maintenance, that will be expensed only. So there is a combination of both. Let me see if I have the answer here, or did I omit? Yeah. So as I mentioned, company should recognize costs separately at time of acquisition. That is the component base. Carrying value of such part should be de-recognized and that of new part recognized at time of replacement. The day-to-day servicing are expensed, as I mentioned. Servicing charges which are incurred at time of replacing part should be capitalized. So this was what I was mentioning, right? So let's move ahead. Again, a very interesting question. So here was a situation where we were able to see what perhaps was the cost. Now here is a situation where there is a heavy road transporter where there is a part which is to be replaced. So the life of the main equipment is 10 years. It has 100,000 rupees of cost. There's no breakdown of component parts which has been taken. Now, after some period of time, the so at the end of the 6th year, the powertrain requires replacement. So powertrain is a part of that. It is going to be replaced. It can be taken away. So there's a component-based approach which is there, and the cost is 45,000 of replacement today. Now, how will you account for this replacement? Is my next question. Again, 1 लाख रुपए का जो मेन इक्विपमेंट है उसका एक पार्ट है जो पहले उसकी जो पूरी लाइफ थी 10 साल की थी, 6 साल के बाद जो पावर ट्रेन है उसको रिप्लेस करना है. आज की डेट में अगर मैं पावर ट्रेन रिप्लेस करता हूं तो उसकी जो कॉस्ट आएगी वो आएगी 45,000. तो मैं अकाउंटिंग इसकी कैसे करूंगा? So can I get some answers?
Can you see chat box, sir?
Yes, Purnima, your answer is correct. But आप किस वैल्यू पर उसको करोगे? That was my question. 45,000 is the one today. आपने उसको add तो कर दिया. If you recall, I had said that there would be a capitalization as well as a decapitalization. तो आप decapitalize कैसे करोगे उसको? Anybody else? Yes, decapitalize the old part 45. No. So this is the issue which we need to understand. So today I don't know, at that time when I bought it, I did not estimate, और मेरे पास अलग से इसकी cost नहीं थी. मैंने जो power train की cost, I have to estimate that today. How will I estimate that? Let us see how we will estimate. So 45,000 is clear. 45,000 will be capitalized. But how will the existing cost, which is the depreciated value, will be removed? So for that, we'll have to discount it. We'll have to. So again, the logic is that it will produce economic benefit. Thereby, it will have to be decapitalized. The discount rate, we'll have to see what is the discount rate. In this, it is 5%. Depending on the interest, you'll have to work backwards 6 years and work out what is the value of this part 6 years back. और वो आपको वहां से निकालना पड़ेगा, also taking out the depreciation and then account for that cost. Is that clear? Okay. So let's move ahead. How is the measurement done at the recognition? So which means what I talked about, you will take into account what is the cost. What are the elements of cost which need to be taken? There is the purchase price, which we all know. There are costs which are directly attributable to bringing assets to a location, an initial estimate of cost of dismantling and removing the item. So I get a land, I purchase a land, and it is or it is a long lease, let us say 99 years hence, and the requirement is that when I leave this and I'm going to, let's say, build a hotel, build build a plant, whatever I do. But the requirement is that there I will have to bear the dismantling and removing the asset there and giving the land as it is back to the authorities. So what happens? Similarly, I have obtained the a mine, the land there, the right is there, but this I will have to give back after clearing up everything. I have taken up a land. I've put up a hospital there, but I have to give it back and remove everything and give it back as it is. Or I have taken, a leasehold premises, which I can recognize as a right to use asset, and whatever I have done, whatever has been the leasehold improvements I have to remove at the time I'm going to vacate the premises. So the requirement of this standard is that the estimation of that dismantling cost I will have to estimate today. So let us say it has to be done, let's say 50 years later on, 20 years. So this normally comes in to play where there are large, let's say, plants where there could be pollutants. For instance, there could be nuclear energy plants, there could be chemical plants, similar plants, or there could be quarries, etc. So where the land has to be returned back to whosoever has given it to you uh, after a certain period of time, which means it's a long lease period. So there you will then estimate today what you're going to incur tomorrow. You are going to discount that value. So let us say today you will estimate that the cost after 20 years, and now these are valuers, there are experts who will tell you that after 50 years or after 20 years you will spend let's say 20 crores on clearing up that place in dismantling and removing. You will need to discount it today to a value based on the discount rate. So maybe that comes to, let's say, 5 crore. That 5 crore you will add to the cost of the property, plant, equipment today, and you will build it into the cost for depreciation. And this you will then every year keep on estimating. There is an unwinding of discount which happens every year. That cost keeps on increasing, and at the end of the year, at the end of those 20 years, it will come to 20 with an unwinding of that discount into your profit and loss account. And so this keeps on getting added. There is a similar requirement in the Indian standard also, the new accounting standard on fixed assets. But there is no requirement for discounting that there. So this is as far as the element of cost is concerned. Some of the other than directly attributable costs would be employee benefits, which mean if you're constructing an asset, you have your team which is you've allocated there, who is looking at the entire supervising the entire process for setting up of that plant. There is cost of site preparation, other normal costs, anything which is required for getting the asset ready in the manner which has to be used by the management. All those costs will be. So if you look at there, but going back, any cost directly attributable to bringing the asset to the location and condition necessary for it to be capable of operating in the manner intended by the management. So importantly, it says any cost directly attributable to bringing the asset to the location and condition necessary for it to be capable of operating, which means that it is not necessary that it starts operating. It has to be in a condition capable for operating. So if it is ready, for some reason it is not being used, it is lying idle, you cannot capitalize costs which are incurred thereafter. That is what one needs to be clear about. So these are costs which are not items, so they'll not form part of PPE. Costs of opening a new facility, costs of introducing new product, opening new facility could be inauguration expenses, uh, administrative general overhead costs, again cost of conducting business in a new location. So anything which is not connected with bringing the asset to the location and in the condition necessary for operation will not be considered to be a cost for capitalization. So that is important to understand. And also one thing which is not covered here is in terms of the borrowing cost. So borrowing cost, again, you would have perhaps looked at that standard also. Borrowing cost will only be capitalized if it is a qualifying asset. And all of you would be aware of what is a qualifying asset, which necessarily takes a substantial period of time. This standard does not talk about any particular period. The standard earlier, the one under IGAP, required a year or so. So borrowing cost can also be capitalized if it's a qualifying asset. And admin and general overhead costs cannot be capitalized. Again, some of the costs which cannot be capitalized. Initial operating losses, which means that if you have, again, as I mentioned, that the plant is ready uh, for use. Now I cannot say that just because I'm not reaching break even, and initially if I'm continuing to use a plant, I'm not able to get the desired level of production, all the expenses there which I'm incurring will be capitalized. That cannot happen. So initial operating losses cannot be capitalized. uh, Again, incidental operations before or during in connection with construction are not recognized as PPE, either not recognized or they are not connected with that. So the example which the standard also gives is that supposing there is a building which is being constructed, and during that period of time, the site is used as a car park, and income is generated. How will this income be treated? So can I get some answers in this? एक बिल्डिंग बन रही है, बिल्डिंग जब बन रही है तो साइट, लेट अस से इट टेक्स 12 months और मोर, लेकिन तब तक वो कार पार्क के लिए यूज हो रहा है. उसका जो इनकम है कार पार्क की, उसका आप क्या करेंगे? प्रिंसिपल है कि जो इंसिडेंटल ऑपरेशंस बिफोर और ड्यूरिंग कनेक्शन आर नॉट recognized as PPO, so there is no connection with PPE. This is a question of income. Yes, let me see what. Excellent. So I have Mr. Vasantlal and Anshul have replied that this is not connected with the asset. It has to be taken to income. Absolutely right. Great. Thank you. So let's move ahead. Again, self-constructed assets, where I am constructing the asset. It is possible that I am myself making the building, or the factory building. In that, so I have my own people I've hired, or even if I have outsourced something, but the control is with me. In that respect, principles, similar principles as an inventory will be followed. So you will exclude any internal profit, and any abnormal wastages will be eliminated, which means that supposing you have a department which is carrying out, so you have an engineer, a site engineer, you have people who are there, and there is in your company there's a transfer pricing mechanism. So if they are going to load those profits onto the head office, that will have to be eliminated. So that cannot be taken to be a part of the cost of the asset. Secondly, any normal wastages. So you estimated that, okay, 1%, 0.5% would be a wastage in terms of my steel, my cement, or I'm just saying. But if there is anything abnormal, all that can also not be capitalized. A government grant, you would have gone through the standard. It is now permitted to reduce from the cost of the asset. The other option is to take it as deferred income. So if there is a government grant, then that will be reduced in respect of an asset. It can be reduced from the item of PPE. Uh, Again, bearer plants, in terms of recognition, the way in which self-constructed items are accounted for. So you are, let us say, you have a coffee plantation or a tea plantation. Your seeds purchase, your fertilizer, all the development activity which goes on is similar to as you are constructing a building, setting up all those brick and mortar aspects. Similar principles will be followed here for accounting for the cost for a bearer plant. Very interesting again, talks about barter, and the earlier standard also talked about assets acquired in exchange. But the aspect here, which is very, very interesting, is that it enables you to account for it on fair value. So if you want to account for an exchange on fair value, there are two things which the standard says. One, that it cannot be accounted for at fair value unless the exchange lacks commercial substance. It will be measured at fair value unless exchange transaction lacks commercial substance, or fair value of neither the asset received nor asset given up is reliably measurable. तो रिपीट कर रहा हूं कि कॉस्ट जो आइटम पीपीई की है उसको फेयर वैल्यू पे लेंगे एक्सचेंज के अंदर, जहां पर कि एक एसेट मैं दूसरे एसेट के साथ एक्सचेंज कर रहा हूं, एक लैपटॉप दूसरे के साथ एक्सचेंज कर रहा हूं, उस सिचुएशन में हम देखेंगे कि कर सकते हैं, लेकिन सिचुएशन वो है एक प्लांट दूसरे के साथ एक्सचेंज हो रहा है, एक मशीन दूसरे के साथ एक्सचेंज हो रही है, उसमें फेयर वैल्यू तभी ले सकता हूं, it will be measured at fair value unless exchange transaction lacks commercial substance or fair value is not reliably measurable. दोनों assets की, यहाँ जो जा रहा है यहाँ जो आ रहा है, lacks commercial substance, we will just understand ki what that means in the next slide. If you are able to measure the fair value of both the asset received and given up, then the preference is to take the fair value of the asset which is given up, unless the one which you receive is better, more clearly evident. And if both are not available, then the cost is measured at carrying amount of the asset given up. So A is the asset which I have, B is the asset which I am getting. If A or B, fair value of A is preferable, unless B is more reliable. आपने fair value का standard अभी पीछे पढ़ा होगा. So B के value more reliable है तो मैं B के basis पे करूंगा. अगर A और B दोनों नहीं है, so A जिस पर carrying value है उसके ऊपर मैं I will record that. We will just see some examples also. Commercial substance का मतलब ये है that it means that the asset which is being exchanged, A और B, दोनों के अंदर इतना ज्यादा difference है that the configuration of the cash flows, which means the risk, timing, amount, everything, as well as the entity specific value can change. So जो मैंने आपको लैपटॉप का एग्जांपल दिया, या सपोजिंग आपके पास एक गाड़ी है, आपने उसको दूसरी गाड़ी से सिमिलर गाड़ी से एक्सचेंज कर लिया, आप फेयर वैल्यू नहीं ले सकते, you cannot take the fair value. But there is, we will look at an example now when we can take. So let me open up again the question here, that in what situation, based on whatever I mentioned, can you take fair value for the exchange of asset? मेरा question, is everybody clear? Rajiv Dhingra ji, आपका question I will take later on because it's slightly, so please hold on towards the end. Once I do the session, then I will take your question also. So anybody who can reply to the question which I had asked? My question I'm repeating again, that in what situation can you come to a situation where I can take fair value? Can you come based on what I've said? Otherwise, we'll take that example. Okay, so let us take the example then. So the consideration was configuration of cash flows, asset differs, and entity specific value changes. So here is a situation where an entity exchanges a factory that is fully operational. Fully operation means that there are cash flows. So maybe it is acquired, maybe there is an exchange, maybe there is a settlement or something, whatever has happened. So there is a factory, let us say in Maharashtra in an industrial zone, and I am asked to take up a factory. For that, a land is given to set up at in Assam at a place where there is no industrial area, which means that the entire configuration of cash flows will change. In this respect, the fair value of the asset which I'm giving up, if that is it is evident, I will take as a fair value for the exchange of the transaction. So is that clear? Can you respond? Is that clear?
Yes, sir. There are answers coming in the chat box.
In the chat box. Okay, I'm not able to see the chat box. I only have the Q&A. Okay, so you can see if that's clear. So we'll move ahead. And here is a situation. Again, something else. So here is a situation where there are two warehouses. Factories are located in the same vicinity. XYZ and ABC decide to exchange these warehouses. Carrying value of warehouse XYZ is 1 lakh and its fair value is 125. It exchanges warehouse with that of ABC. So XYZ is a company जिसके अंदर warehouse है, उसने warehouse exchange किया ABC के साथ, fair value है 1,25,000, उसको cash भी मिल गया 5,000. इसको कैसे account for करेंगे आप? How will you account for this? Whether you can take it on fair value or whatever I've discussed right now. So can I get some answers now? Let me see.
Answers are coming in the chat box.
But the answer which I'm wanting is not coming. I'm just waiting.
Okay.
He's waiting for the correct answer.
Yeah. So commercial substance, I think there is a question ki what is commercial substance? So let me go back to the slide. I had said configuration of cash flows, which means that the nature of cash flows. So I had mentioned to you, and this was the example which we took. So there is a running factory which is exchanged for a new land which will where the cash flows. So let us say I'm earning a profit of, let's say, 1 crore of rupees every year. Now I have to set up a new, and the cash flows which I am getting on that basis, I am being asked to exchange that with a new factory at another place. It may or may not be the same product also. Here is where there is a commercial substance, because the nature of cash flows will change. The other point is that obviously the entity specific value is going to change also, because earlier there is a profitability which was coming in. Here it may be higher, maybe lower, but there is a difference. That is why it is said to be commercial substance. But in this situation, what is the any answers here? Okay. Let me see what is the answer here. We're getting value 1 lakh. Yeah, but 1 lakh less 5,000, because 1 lakh is the carrying. So this is not a situation where there is a commercial substance, because these are two similar warehouses. And if it is not, the configuration of cash flow doesn't changes, the entity specific value does not change. Thereby, I will have to record it at the carrying value of the asset which is being given up, which is 1 lakh. Against that, I've received 5,000. So I'll record it at 95,000. right? So that is the answer. नवीन जी आपने 1 लाख कहा था या कैरिंग अमाउंट वेरी गुड ये anonymous attendee है दो no commercial substance very good it's good if you can put your name will not hold you against it thank you okay so let's move ahead now what happens measurement after recognition so I had said that the at recognition now we've seen key what goes into the cost what does not go into the cost as we move forward we have a choice we can take it at cost or we can take it at fair value. That is what I had mentioned. So this standard permits both. So India 16 permits two accounting models. One is the cost model, the other is the revaluation model. An entity chooses the model and accounting policy applies to an entire class of property, plant, equipment. The class of property, plant, and equipment is the aggregation like land, building. Land is one, building is one, the machinery could be one, office equipment, furniture fittings. So you can you have to choose it for if you use the cost model you have to use it against an entire class of property, plant, and equipment. I've also given examples of the class. It includes motor vehicles, furniture fittings, bearer plants. Uh, so so again, दो options available हैं cost model revaluation model जो है that is the fair value model आप cost choose कर सकते हैं revaluation model choose कर सकते हैं अपनी accounting policy में after recognition which means पहले आपने cost determine कर ली उसके बाद as you move forward आप cost पे जा सकते हैं revaluation पे जा सकते हैं और companies के पास दोनों choices हैं now what happens cost model के अंदर obviously you will have the जैसे हम पहले भी करते रहे cost less accumulated depreciation in a similar manner it has been done earlier and impairment standard you would have studied under 36 what happens in the revaluation model you have an acquisition date then you have revaluation and subsequently you can have revaluations again fair value where fair value can be measured reliably and fair value less subsequent depreciation and impairment losses we discussed earlier also so where the fair value can be measured reliably you would have discussed as far as the levels level 1 level 2 level 3 is concerned so a lot of times companies would like to take a fair valuation on let's say their if they have land and building maybe the property plant equipment or sometimes because the machinery is very old they would like to revalue it they could also like to revalue their building or land which was taken at an earlier value and today does not reflect at the right value so it can be revalued so again if you look at the chart earlier property plant equipment recorded at cost then first revaluation date carried out a revaluation and thereafter revaluation less depreciation and now in any case there is no write back from the revaluation reserve the which was permitted under the guidance note earlier and that in any case has been removed even for the IGAP and for Ind AS in any case there is no option which means that if you are going to revalue your property plant and equipment the additional value which is going to the incremental value the depreciation will also increase so your charge to the P&L will increase to that extent so that is something which one needs to bear in mind now what one needs to look at in case of revaluation model is that there has to be a regular revaluation and the standard does not say at what frequency it has to be done but whenever the valuation wherever the value differs from what is the carrying value, the revaluation will have to be done. So for land and building, it could be fairly frequently. In case of plant and machinery, the standard says you could look at a period of 3 to 5 years. The revaluation method can be done on gross adjustment or net adjustment method. I will not take too much time here. Uh, I, I will go to this question, and this is a slightly just coming back here. And effects on, sorry, I missed that out, on taxes, which could be the deferred tax, will be again reflected in as per Ind AS 12, which you would have looked at in the earlier standard. So if the revaluation goes to your retained earnings, or revaluation is routed through OCI, the same will be done for the deferred tax also. Now here is a situation, and this is on the class of assets. I had not, I told you that class of assets could be land, building, the bearer plants could be plant and machinery. But for the revaluation model, one could have a much narrower basis for the class of assets. Uh, it cannot be merely geographical. That is all I can say. Now, with that background, let us look at this question and see whether we can do the revaluation, or what the company is doing is correct or not. So I'll read it out. Entity A has a large is a large manufacturing group. It owns a considerable number of industrial buildings, such as factories and warehouses and office buildings in several capital cities. Industrial buildings are located in industrial zones, whereas the office buildings are in the central business districts of the cities. जो ऑफिस बिल्डिंग्स जो इंडस्ट्रियल बिल्डिंग्स है वो इंडस्ट्रियल जोन में है, ऑफिस बिल्डिंग्स हैं सेंट्रल बिजनेस डिस्ट्रिक्ट में. Entity A's management wants to apply revaluation model, subsequent measurement office building, but continue to apply historical cost model to industrial. तो एंटिटी ए की मैनेजमेंट कहती है कि हम रिवैल्यूएशन मॉडल अप्लाई करेंगे ऑफिस बिल्डिंग के लिए, और हिस्टोरिकल मॉडल अप्लाई करेंगे इंडस्ट्रियल बिल्डिंग के लिए. ये पॉसिबिलिटी है कि नहीं है? हम 1 मिनट पीछे चले जाते हैं. इसमें हमने ये डिस्कस किया था, रेगुलर इवैल्यूएशन, revalue entire class of assets, or class I said could be a narrower basis than merely land, building and plant machinery, but based on usage, it cannot just be geographical. So my looking for answers for this question now, quickly. Till you are, I'm looking for answer. There is explain regular valuation. A question पूछा गया है. Then can company change its accounting policy? Yes, accounting policy can be changed. If you can just take this accounting policy change, but I'll just explain this regular valuation. Regular valuation का मतलब है कि you need to look at, so supposing you are carrying land and building, and you have revalued. So let's say your 5 crore building, you have made it to 7.5 crore. Now you know that because of a huge downturn in the real estate sector, suddenly the values have plummeted, and you feel that it will continue for the next 2 years. So immediately you will have to get a revaluation done to say, okay, हो सकता है वो 6 crore पहुंच गया है, या it has come down to 4 crores. Okay, but in case you have a plant and machinery, you may feel the normal variation as far as the plant and machinery value is concerned may not be that frequent, thereby frequency can differ. Now just coming back to this question, I was looking at answers. The no it applies to entire class of assets. No, we have to apply policy uniformly. So here is the catch. I told you that you can have a much narrower definition. Now, the entity A's management has been very, very intelligent. They have seen that wherever commercial offices are there the values will go up more. Thereby, they can do it because it is based on you. And there, so office buildings and factory buildings can be a separate class for the purpose of revaluation. So this is acceptable under Ind AS 16. So revaluation again goes to credit OCI and accumulated under equity under revaluation surplus. As I mentioned, if decrease is there, unless it matches an earlier decrease, then it can go to income. Converse is there for a decrease in value. If there is a disposal, then you can take the revaluation reserve to retained earnings. I'll not spend too much detail on this. So there is a gross basis or a net basis in which you can recognize the increase or decrease as far as revaluation concerned, which technically means that if the gross value is 200,000 here, accumulated depreciation is 80,000, useful life of machinery is 10 years, fair value is, and the net carrying amount is 120. Again repeat कर रहा हूँ, 2 लाख रुपए gross carrying value है, depreciation 80,000 है, net carrying value 1,20,000 है, fair value on that date is 1,50,000. Now the standard gives you two options कि आप net adjustment कर सकते हैं या gross कर सकते हैं. Net adjustment का मतलब है कि I will carry forward this 150 only as my cost and thereafter depreciate over the next 4 years the next 6 years, sorry, 4 years has already passed. So the earlier depreciation was 20,000 per year and the depreciation thereafter will have to be 25,000 for the next 6 years. Or what we can do is that proportionately we will increase the gross carrying value to 2,50,000, accumulated depreciation to 100,000 and come to a fair value of 1,50,000 and also then depreciate. So gross adjustment or net adjustment. Now my sense is that because the schedule 3 requires you to present the asset, the gross as well as the accumulated depreciation, the gross adjustment would be better. In the presentation I have given out a detailed working also, so I'll not spend too much time on this. We will move ahead. Depreciation and impairment, and there was some discussion about the component. Yes, schedule 2 talks about component, the standard also talks about, and I've taken a clear example about an aircraft. So when you are looking at depreciation, you can depreciate the components separately based on their estimated useful life. For instance, you see this aircraft in front of you. The fuselage, the engines, the seating fittings will have different useful life. And they are also bought in that manner and replaced also in that manner. Engines could be about 20 years. Fuselage could be about 5 years or so. Seating fittings could again be about 5 to 6 years. So this is the way componentization and any part of property, plant, equipment which is significant in relation to total cost can be depreciated separately. Schedule 2 also talks about that, so I will not spend that much time. I think we are all aware about Schedule 2. But yes, this is a very, very important concept, and it is now built into the Indian, in the Schedule 2 also. Land and building, again, you can separate, and building and land can have separate useful lives again, because building has a limited useful life. Land could, unless there are some mines, quarries, or sites for landfill, will have a unlimited useful life. And an increase in value of land does not necessarily mean that the building value will also increase. Again, depreciation depends on expected usage, physical wear and tear, commercial obsolescence, but the useful life is given in Schedule 2. You can vary from that if you have a technical assessment, which could be based on this, which means expected usage, that it can be used for, let us say, so many years, or these many production units can be generated. As I had mentioned earlier, that this machine can do so many tests. There is a technical or commercial obsolescence, which means that the technology is going to go out of place. So that could determine depreciation. And the depreciation is determined after deducting residual value. And we looked at what was residual value. Again, the depreciation will commence when the asset is available for use, which we talked about. So it means that if the asset is available for use, but it technically does not start being used, then still depreciation can be charged because of obsolescence. There is a commonly misunderstood term which is from tax, which is taken, which is not available for use, and this available for use is what we need to see from an accounting perspective. It's not that it is being used, but it is available for you. So let us say the plant got inaugurated on 1st April 2016. It is all the tests, everything has been done, but it is still not being used because the market is not there. There could be something else. Now depreciation will still have to be commenced from 1st April 2016. It cannot be delayed. So that is something which one needs to look at. Both residual value and useful life need to be reviewed, and if there is a change, it is a prospective, and that is a change in estimate under Ind AS 8. It is different from even the change in the method, which we will see is a change, a prospective change. So this is a depreciation method. There are various methods. Normally we use SLM and WDV. Units of production, as I had mentioned to you. So supposing there is a machinery which, let's say, produces 10 lakh units, you could split and see, okay, 2 lakhs in a year. So the machinery can be depreciated over 5 years. The method has to be consistently used. Any change in the method will be a change in accounting estimate. It will not be a change in accounting policy, as was there in the earlier standard AS10, AS6, which required you to recompute it retrospectively. Impairment, again, will 36, Ind AS 36. Now, what happens in this situation where you receive compensation from third parties for an item that has been impaired? So you will take it as receivable. So there's an insurance company which is going to give you compensation. It could be another company which is going to give you. How will you account for it? So quickly we look at this this example, and I'll ask for your replies. So there are 5 manufacturing units. On April 1, 2015, a major fire broke out at one of the manufacturing units. All fixed assets are insured under a fire insurance policy. Carrying value was 8 crores. Entity A received insurance claim amounting to 12 crores, including 10 crores for reconstructing the unit and 2 crores for loss of profit. Actual cost of rebuilding unit is 11 crores. How will the entity A account for the same? एक मैन्युफैक्चरिंग यूनिट में आग लग गई, वहाँ इंश्योरेंस पॉलिसी है, इंश्योरेंस क्लेम मेरे को मिला 12 करोड़ का, जो कैरिंग वैल्यू था 8 करोड़ का था, 2 करोड़ मेरे को मिला ऑन लॉस ऑफ प्रॉफिट. Actual cost of rebuilding unit is 12 crores. So how will I account for the same? Very quickly, basic. In any case, the compensation, when it is receivable, which means that there is no uncertainty with regard to that, then you can recognize that. So can I look at some of the answers? Okay. 12 crores in the PNL, yes. What happens to the 8 crores? 8 crores, anybody on that 8 crores? Be recognized, absolutely. And the asset, which is the new asset, will be taken at 11 crores. Okay. So that will come into the cost. So great. I think that's very good. So that was as far as the impairment is. So derecognition, again, very simple. When uh, there is no future economic benefit except expected or on disposal, it will be, which means either you are selling the asset or you feel that it has reached its end of the useful life. You can then take it under the those held for sale. Importantly, gains will not be classified as revenue. So revenue is what you are getting from operations. Gains is definitely income, but it will not be classified as revenue. So that is something which we need to understand. So I am mindful of the fact that we need to take another standard. So we'll quickly look at couple of case studies, then I'll go to investment property if that is okay with everybody. So let's look at the first case. Enabling assets is setting up a new refinery outside the city in order to facilitate construction required to incur on construction development of railway siding, road and bridge. So if you recall, I talked about the hydropower plant. So similar example. Though ABC Limited incurs or contributes to the expenditure on construction, it will not have ownership rights on these items, and they're also available for use to other entities and public at large. Whether ABC can capitalize expenditure, तो ABC एक रिफाइनरी सेटअप कर रही है आउटसाइड सिटी, उसको कंस्ट्रक्ट करने के लिए एक एक्सपेंडिचर करना पड़ेगा डेवलपमेंट रेलवे साइडिंग और रोड एंड ब्रिज का, जो कि जरूरी नहीं है एबीसी ही को बेनिफिट रहेगा, उसकी ओनरशिप भी नहीं रहेगी, तो वो कैपिटलाइज कर सकता है एक्सपेंडिचर, नहीं कर सकता. दैट इज द क्वेश्चन. तो कुछ आंसर्स आप लोगों के मिले तो कैन आई गेट सम आंसर्स क्विकली? I'm waiting quickly. Yes, I'm getting so. Okay. Capitalize and charge off. Yes, capitalize. Okay. So I think there is mixed opinion. Some are saying it can be capitalized. Some are saying it cannot be capitalized. It can be capitalized because it is an enabling expenditure. You need to do this expenditure to be able to build that plant. The expenditure will be spread over the plant. It will be spread over the cost of the plant. You recall again I'm repeating I talked about the hydropower plant which was coming up and how the expenditure on that for building the road could also be capitalized. So this was one. It has to be capitalized. I'll leave this and we'll go to the next one because we need to. Okay. Expenditure incurred to obtain regulatory permission to set up factory. What is your answer on that? Whether that can be capitalized?
Maximum people in the chat are saying it should be capitalized.
Absolutely. Can be capitalized. What about expenses incurred for welfare of employees?
No. For the expenses, they're saying no.
Great. And what about liquidated damages payable subsequent to commissioning of plant?
No.
Great. Wonderful. So I've I think fairly broadly, I think everybody has understood. So then we can move on to the next standard. Deepak ji, quickly.
Yes, sir. Yes. Sure.
So this was a much larger and a much more. So investment property, I'll try to complete in the next half an hour only. Okay. So we'll move ahead. I'll skip this because I've already covered the. But
Sure,
just one thing. Sorry, I'd like to cover some disclosures, right? Hello?
Yes, sir.
Yeah, okay. So I will just look at the disclosures part.
Yes.
So measurement basis depreciation method, these are some of the common disclosures which are used. Useful lives or depreciation, gross carrying amount, reconciliation of carrying amount at beginning and end of the period. Again, any restrictions on title. So these are some of the disclosures which are any contractual commitments for acquisition. And I want to show you this again, method of depreciation, some depreciation charge, accumulate, this we are all aware. Additional disclosures where revaluation model is adopted. So there you need to mention about what is, what level you have taken, whether you've used a external valuer or not. Then there are some non-mandatory disclosures also. Uh, and I'm taking you through a balance sheet of a company, which is a airline company. Uh, so again, if you see here, are measured at cost less accumulated depreciation. What the cost comprises, we discussed that. Separate component. If significant parts, separate component, this is an airline. Subsequent costs are included in assets carrying amount or recognize separate assets as appropriate when there is probable that future economic benefits will flow to the company. Major inspection costs are also capitalized and depreciated. Then I was talking about this. Owned and leased aircraft, this is depreciation. Major inspection overall costs, useful life 12 years. Aircraft engine, I told you 20 years. So this is the way they have split. They've given the disclosure of depreciation. Uh, Again, this is the way a balance sheet will look at like. So can we move to investment property now, Deepak ji?
Yes, sir, you can move.
Okay, thank you. Again, just coming back, I told you the rationale for having this standard. Investment property, the main aspect in case of investment property is to distinguish between what is or is not an investment property. So before I start, I have a property. What are the possible ways, now that you know that it is an investment property, what are the other two ways in which that property can be? So let's say I'm a real estate company. What are the ways in which that property can be used and accordingly disclosed? So quickly before I start this session. So there was a question that do we need to ignore deferred tax on revaluation of assets? It's a permanent difference. So there is no concept of temporary or permanent now because it will be asset based. So you'll have to see whether it's a taxable temporary difference or a deductible. So you'll need to work out on the asset basis. My question is, what is the way in which we are disclosing? I am a real estate company. What are the, other than investment property, which we will just understand, what is the way in which the property, plant, equipment can be disclosed or the assets can be disclosed quickly? So I am not getting any answer here.
In the
So,
chat box, answers are coming. People
okay,
are saying sale as the inventory to be treated as investment property, work in progress, used for his business.
great. So that is what I wanted to say. Investment property is determinant on the use. So property, plant, equipment, we saw that it is to be used for the production, either for producing goods and services. Investment property, or if you are using it for, if you are holding it for sale, it will become an inventory. What is investment property then? Okay. Let us see what are the objective scope and how investment property is defined. Again, accounting treatment for investment property related disclosure does not apply to biological assets, which is there in Ind AS 41. Again, mineral rights and mineral reserves are similarly not applicable here. It goes under the standard Ind AS 106. Investment property. What is the definition? Is property, land or building, as we distinguish from the PPE, held by the owner or lessee as a right of use asset. You have gone through your Ind AS 1116. So it is, one is owner. So let us say a large real estate company, DLF or anybody else is holding property, land or building uh, to earn rentals or for capital appreciation or both. Now, how is this different? Rather than for use in production or supply of goods or for administrative purposes or sale in the ordinary course of business. So if it is used in production or supply of goods or services or for administrative purpose, it will be a PPE. When it is sold, sale in the ordinary course of business, it would be inventory. So I am a real estate company. I am using a building in Cyber City only for in Delhi, let's say Cyber City, as my office. The entire building is used as my office. Now that is what will that be? And supposing I am that is going to be PPE. I construct houses for sale. Obviously, they are going to be my inventory. But if I also construct buildings which I am going to rent out or I am going to hold for capital appreciation or both the things, then it will be an investment property. That is the whole distinction, right? Again, cost is similar and carrying amount is similar to what is there for PPE. So I'll skip that. Owner occupied property, we've just discussed. In Ind AS 40, the term which is used is owner occupied property, which is for PPE. Just coming back here again, I think I missed one thing. One was the owner and the other was the lessee as a right of use asset. So now you know that under Ind AS 116, I am a lessee in case of an operating lease. But if all the conditions for 116 are satisfied, I will need to show it as a right of use asset. Now that right of use asset I have further leased out, then it will become an investment property for me. That is the reason why I talked about property held by the owner or the lessee as a right of use asset. I think this is the most important aspect in this whole standard. And if we understand that, then we've really understood the crux of the standard. So, what are examples of investment property? So there is land which is held for long-term capital appreciation, land held for a currently undetermined future use. So if I have land which I don't know how I'm going to use it, so there is the board or the management is not aware, there is no board outline policy that how it is going to be used. I will decide about it in future. I don't know if I'm going to make an office out of it, I'm going to sell it. That is investment property. Building owned by the entity and leased out under one or more, so that this we just discussed. A building that is vacant but is held to be leased out under one or more operating leases. So it is vacant as of now, but I am holding it to lease it out. Again, investment property. It is being constructed or developed for use as investment property. So I have purchased land. All the intent, my resolution shows that it is going to be used as an investment property in future. Then it is an investment property. But it also must be remembered that investment property during the time period when it is being constructed or developed, the cost will be put in terms of the principles which are laid down in the standard Ind AS 16, which is PPE. So this is the example of investment property. What is not investment property? Property intended for sale in the ordinary course of business. Again, that is going to be taken as inventory. owner occupied property, we just discussed what is owner occupied property, including property held for future use as owner occupied property. So we just said that if there's a property which I'm holding where I don't know what I'm going to do with it in future, that is investment property. But I'm holding it in future to use it as my office, my administrative, for my employees or something, guest house, anything for my own purpose. It is a owner occupied property, which will come under PPP. Property held for future development and subsequent use as owner occupied. Again, owner occupied property. Property occupied by employees. So I have housing colonies. I have which as a company, that is again owner occupied. Owner occupied property awaiting disposal. Again, this will go under assets for disposal. It is still not investment property. It is owner occupied property. Property that is leased to another entity under a finance lease will not be an investment property. So there could be, again, a property where there could be a multiple purpose. So I have a whole building where part of it I'm using as my office, part of it I've let out. How will that be taken to be? What is investment property? So you need to see investment property, only insignificant portion is used for production or supply of goods or services or for administrative purposes. So I have, let us say I have a building of 10 floors. A part of one floor I'm using for my office. So I can say insignificant is not defined, and insignificant is typically very, very, it could be less than even 5%. But not material. So here is a situation where if an insignificant portion is used as for my owner occupied purpose, then I can say that the balance can be taken to be an is a investment property. Again, there is no definition for insignificant. Different situations can be taken to be insignificant or significant, but the situation will on hand will determine what is insignificant. So here is a situation where if you look at two situations, A Limited owns a building having 15 floors, of which it uses 5 floors for its office. Remaining 10 floors are leased out to tenants under operating leases. According to law, according to the legal aspects, which means title and all, company could sell all the 10 floors while retaining legal title to the other 5 floors. Now, can it be classified as investment property? Is the first question. So can I have an answer to that?
Yes, please revert in the chat box. Yes is the answer we are getting, sir. Maximum people are saying yes.
Okay, great. So here is a situation where I perhaps missed telling you that here you can easily separate the two, because legally you can separate these 10 floors and 5 floors. In a situation where you cannot, there you need to see whether significant or insignificant. So let's look at the next question. Thank you for that answer. I think you understood correctly. A Limited uses 40% of office space of a building as a registered office. It leases remaining 60% to tenants, unable to sell the tenant space or enter into finance lease related solely to it. Can it be classified as investment property? What is the answer to this? Deepak ji, you're getting the answer?
Yes, mix of answer we're getting, sir. Some are saying yes, some are saying no.
So this will be no, because this is not insignificant. 40% is in no way. 40% insignificant नहीं है, बहुत कम नहीं है, प्लस इसमें सेपरेट भी नहीं हो सकता totally वो, there is no distinction जैसे ऊपर वाले केस में था, thereby this cannot be classified as an investment owner occupied property only. It's also important to understand about ancillary services. अगर आप किसी बिल्डिंग में हैं, you are in a building which is a commercial building, so there will be maintenance services which are provided. Now, if that is again insignificant to the arrangement, the main arrangement is to provide you that building, to lease out the building. Everything else is in ancillary, which means cleaning or other maintenance services. There could be lift maintenance, others. Then these ancillary services will not debar you from recognizing this as a investment property. However, look at a situation where there's a hotel. Now, in the case of a hotel, the services of F&B and all, in terms of how it is to be provided, all these services together taken are not ancillary, but are part of the entire services. It cannot be taken to be an investment property. It will be taken to be an owner occupied property, unless there is a separate section which has been leased out for, let's say, a gym, a health club, or shops, which you will see, which are not insignificant. But judgment is required in terms of determining. Now, what happens in case of consolidated financial statement? So I may have leased out property to a parent or another subsidiary. Now, logically, in my standalone financial statements, it will be shown as investment property. But in consolidated financial statements, this part about leasing out to my subsidiary will be eliminated, and it will appear as a owner-occupied property, because in the consolidated financial statement, that aspect will have to be eliminated. Again, recognition, measurement, and derecognition. Quickly, we will go through that. The criteria is similar to what was there in Ind AS 16. In right of the right of use asset, Ind AS 116 will apply. It is initially measured at cost. Broadly, same aspects. The purchase price, attributable expenditure, because I said as the investment property is coming up, the same cost will be taken. Self-constructed investment property, cost till the date when construction or development is complete. Principles again similar to Ind AS 16. Your startup costs, operating losses. So operating losses again, you could have a situation where you say, okay, I have 1st April 2016, same date I'm taking as I took in Ind AS 16, is the date when I have opened it for commercial leasing. But I've only got about 10% of the occupancy. Now, my expenditure, my fixed expenditure is there, my maintenance expenditure is there. I cannot say that the losses which I'm incurring, maybe my break even is at 30%. So I cannot say that the losses which I incur because my building has not been occupied fully, I could capitalize that, take as my cost or the investment property. Those will have to be expensed off. And again, if it's a self-constructed investment property, the same principles which I used for my property, plant, equipment will be used here. Principle यहाँ पर same है जो Ind AS 16 में है for determining the cost of the investment property. और एबनॉर्मल लॉसेस, एबनॉर्मल अमाउंट्स नहीं ले सकते, स्टार्टअप कॉस्ट को मैं कैपिटलाइज नहीं कर सकता, ऑपरेटिंग लॉसेस जो है वो मैं कैपिटलाइज नहीं कर सकता हूँ. परचेज प्राइस और डायरेक्टली एट्रीब्यूटेबल एक्सपेंडिचर जो सिमिलर सिचुएशन जो Ind AS 16 में थी यहाँ पर भी है, और सेल्फ कंस्ट्रक्टेड एसेट के लिए जो वहां पर थी वो भी यहीं पर. Similar aspect as far as investment property acquired exchange. जो commercial substance aspect which I mentioned there, similar here, fair value can be taken if those conditions for commercial substance are satisfied. Importantly, if I take an investment property I purchase and the consideration is deferred, the cost is the cash price equivalent. So let us say 10 crores was the cash price, but I am 12 crores is what I have to pay, but this is after 2 years. So this 2 crores will be taken to be my interest expense. Similar aspect will, I think I missed out as far as the PP is concerned. Similar aspect will be taken there because the aspect is a pure cost basis will have to be taken, the cash price equivalent, the balance will be taken to be the interest expense. I'm sure you would have looked at this in India's 115 also. Now, importantly, the measurement after recognition, and here is a distinction between Ind AS 16 and this. The entity only adopts the cost model in case of investment property. Though, very interestingly, investment property standard was brought in to reflect the fair value, because a lot of the real estate companies all over the world, when because it's based on IFRS, and I mentioned the top real estate markets like Hong Kong, Singapore, London, where there are large investment properties. There was a need to reflect this at fair value, because otherwise it was felt it was not representative of the transaction. But the problem which the Indian regulators, the Institute of Chartered Accountants, as well as the MCA also looked at was that in India we could not permit the revaluation model for investment property, because a frequent revaluation and taking the gains of revaluation to the P&L would amount for also, and declaration of dividend from there would be against the basis, or will permit unethical accounting practice. Thereby, the situation is that you will take it at cost, but you will also disclose the fair value. So after an initial recognition, an entity shall measure investment property at cost, or if it is 116, then as a right to use asset, and if it is held for sale, then under 105. You will work out the fair value, but you will disclose the fair value, but you will not state it at fair value. Again, this is important as far as transfer or switching is concerned. If there is a change in use, which means that you can uh, transfer from an owner occupied property to an investment property, when the change happens, or when it's not just an intention, but when you decide actually so your office purpose, your office building which you are using, you can decide that you will now not use it for an office, you can let it out. There will be change in use and it can be used as an investment property. If you decide to dispose of an investment property without development, it will still remain as an investment property unless it is de-recognized. It will not become an owner occupied property. अगर आप जो यूज कर रहे हैं प्रॉपर्टी को, इन्वेस्टमेंट प्रॉपर्टी, उसको चेंज इन यूज अगर करेंगे, तब वो ओनर ऑक्यूपाइड हो सकती है, या ओनर ऑक्यूपाइड से इन्वेस्टमेंट प्रॉपर्टी भी हो सकती है। लेकिन सिर्फ अगर आपकी इंटेंशन है मैनेजमेंट की, सिर्फ इंटेंशन से वो चीज चेंज नहीं हो सकती। अगेन जब डी-रिकॉग्नाइज होगा तो सेम सिचुएशन, यू विल if it is withdrawn, it will be taken to income or expense, the difference between carrying amount and net disposal, unless Ind AS 116 requires on sale and leaseback, which you would have studied. If there is a compensation which is received from third parties, then it will be recognized as compensation when it is receivable, as we discussed earlier. Disclosures, huge host of disclosures, not only with regard to the investment property, but also what is accounted for in P&L, the rental income, the direct operating expenses, and in terms of You have the fair value, the transfers from inventories and honor. So अगर आपने change किया है from one to the other, वो आपको disclose करना पड़ेगा. If there is a restriction on the realizability, that you will have to disclose. Depreciation methods which are used, because if it is a cost, the same depreciation method will be used from the Ind AS 16. The important, if you look at the second bullet, the criteria the company uses to distinguish investment property from owner occupied and for held for sale. So whatever we've discussed, that will need to be disclosed. So we will look at some disclosures in illustrative disclosures in a large real estate company. So if we look here, investment properties are properties held to earn rentals or for capital appreciation or both, are measured initially at their cost, including transaction costs. Subsequent cost detail is given. How is the valuation done? If you look on the right side of the scheme, is stated cost. However, as per Ind AS, requirement to disclose fair value. Now, this is important. Group engage independent valuation specialists to determine fair value of its investment property as at reporting date. Determination of fair value of investment properties requires the use of estimates. So they've talked about how the fair value has been done, what are the risks there, what is the basis that has been taken. Then again, if you see the rental income, direct operating expenses, profit from investment property, depreciation, profit from leasing of investment, all these disclosures are made, including comparatives. Fair value hierarchy also mentioned. I'm not taking detail, but reconciliation of fair values. If there are contractual obligations, those also have to be taken. So with that, I think I will close this session. Deepak ji,
Yes, sir.
cover and within the time.
Yes, sir.
And if we have any further questions, quickly we can take to the best of my ability. I will try. Hope I've been able to cover as per your requirement.
Yes, sir. And we are getting very good messages and positive messages, and people are saying that this is one of the excellent deliberation. On YouTube also, we have got many comments regarding your deliberation. We have few question answer which are in the Q&A section. If
Okay, let me look at that. Okay,
yes,
let
sir.
me see whatever is okay. Just one second. Whether depreciation will be charged on investment property? Yes, I just mentioned.
Yes,
because it will be taken on cost. I missed out PE for a while during load shedding at my place. Whether IFRS 12 recognition is applicable in case of service concern after pronouncement of Ind AS 115. I think this would be relevant for 115, not relevant here.
Yes.
Sir, investment property initially to be recorded at cost only and not fair value. Yes, absolutely. Fair value not to be taken in investment property. Only fair value to be disclosed. In case of a building property 15th, 5th floor used for office and 10th floor used let out, then how it will recognize proportionate amount wise or something else. In case building property of 15th floor, 5th floor used for office and 10th floor used for let out. But what about the balance? That is not clear. So if it is in that respect, whether the entire thing is, if it is not insignificant, then maybe you cannot use it as investment property. How to identify an asset as PP or IP if asset is for rental to others. Rental to others, I mentioned, if it is land and building, then it will come under investment property. Other than land and building, then it will come under property, plant and equipment. In Nepal, we are recognizing investment property at fair value. How India is not able to control distribution? Very good question. Perhaps we can give it to the regulators here. Very good question, and something which makes me think. There are some comments for very thank you so much for your appreciation comments. I think Deepak ji, I have managed to answer
Yes, sir.
all the questions. There was one, depreciation is to be charged on investment. You said to record at cost, not WDV. I had mentioned that the schedule 3 requires you to give your gross cost as well as accumulated depreciation. Thereby, you will give the cost as well as accumulated depreciation. My sense is, Deepak ji, I've been able to respond to all the major queries.
Yes, sir. Yes, sir.
Correct?
Yes.
So we can then close the session, and I
Yes,
would
sir.
like to thank you for really giving me this opportunity. So happy that I was able to perhaps share my thoughts and learn from all of you, learn from all the participants. Even if I missed out something, I know Dhingraji, you had a question. If we can take that offline, because that will require a lot of time to deliberate. Happy to discuss that offline.
Sure, sir. Sure. And
So Deepak
it
ji,
is
Sangam ji, thank you so much.
Sir? Sanjay sir?
Sorry, yeah, Sanjay.Vasudeva at SCV India, S for Shimla, C for Calcutta, V for Victory, India.com. Sanjay.Vasudeva at scvindia.com.
and if you have any queries which you think it's not been resolved, you can directly mail it to Sanjay sir. So hope you will get reply from the Sanjay sir with respect to your
You
NDS.
can forward to us also, and we can also forward to sir. If you have any issue to forwarding to sir, you can forward to us also. From our platform, we will forward to sir and get the reply of that. And
So
thank you very much, sir. Thank you very much for coming on the
thank you,
platform, sir.
thank you so much. Thank you, Sangam ji. Thank you, Deepak ji.
Thank you,
It's
sir.
my
Thanks.
pleasure,
It's
and
our
my compliments to you for organizing this so well, to take this initiative. I think this is a great opportunity, and I feel, and I've always said that lockdown doesn't mean that you stop learning, and you're facilitating this, you're getting members together. Really great
it's,
work you did. Thank
we
you.
are doing it because of the blessing of our
Yes.
senior chartered accountants members like you and other very senior people. So because of that, we are trying to able to manage these kind of webinars. So it's our pleasure that you came today on our platform and given such a nice deliberation. And approximately it was very interactive session. There were around more than 50-60 questions has been answered in today's session. And you can see the Q&A section. Still people are saying that it is very nice presentation, excellent presentation. So
Thank you
from
so much.
this we can understood that even people are and participants were very interactive. And one more thing I could have noticed, initially there were around 250 participants. Until 1.5 hour there were same participants, not a single participant has left the webinar. So
Oh,
generally, IFRS
great.
is such a huge topic. What we have realized is in the day 1 or day 2 there were around 500 participants, and thereafter the people started decreasing because they were not able to grasp the IFRS, because of these standards are very heavy to learn for a normal person or child accountant who are not in the practice of the child accountant. So what I used to get query from the people or message from the ski sir, we are not able to go with the flow of the faculty, but we're watching it on the YouTube slowly on our convenience. So we said okay. So but today they were all with you because it was somehow matching the speed as well as and you make it so interactive that you were asking questions in after every 5-7 minutes. So people liked it, and we have got many good comments on the YouTube as well. People were appreciating on YouTube as well. So I'll share the link with you after this webinar will get over.
Thank you. Really, my pleasure, and thanks to Mr. Khanna and Mr. Vasudeva for being there. And Mr. Khanna, if you would like to just maybe
Yes, I'd like to chip in, and I must say that it's a very beautifully conducted program. I know that I was chairman of the Accounting Standards Board on 3 occasions when I was in the council, and that was a stage of learning very simple accounting standards. From there, we have gone into complications worldwide, even for mankind and also for the accounting standards. That is no exception. So from a stage of learning to unlearning, we have to now go into the stage of relearning. And I think that has started already through these webinars. And I think it's a very good job done by a lot of the younger members of the profession who are arranging these webinars. And I think today was a great experience. For us, a lot of things may be a repetition of what we have seen or done while we were in the institute working away on the language of the standards. But I certainly agree that these standards are not easy to understand taken as a whole. But if you have, over a period of time, I think one can grasp them much better. And I think the way you've explained it so in a simplistic manner, I think that makes a world of difference. And I think what I suggest is, Deepak ji,
Yes,
if
sir.
you can do one thing, all the questions that are asked normally by the participants from all
Yes,
over,
sir.
I think you would draw up what is called an FAQ,
Yes.
you see, and what you do is circulate that to all the participants.
Sure,
Because
sir.
what will happen is that somebody may not have understood some question at some stage,
Yes.
and he wants to ask more. Let them pour in all the questions. Suppose you have 400 questions. So it
Yes.
doesn't matter. But you know, those FAQs are going to be very helpful. That's a practical approach to the whole matter. That's my suggestion.
I'll share all the questions of today's session with Anupam.
Yes.
So I hope Anupam will be able to
Yes,
revert on that.
yes. Surely.
And then we will upload all the queries along with the presentation. So Khanna sir, what we are doing it since last 35 days, we are doing these webinars. So all the PowerPoint presentations, we have kept it at one place on our website. So
Right.
any member or any participants need not to ask it from us or through the WhatsApp or mail. We have kept it open for all the participants. They can simply go visit our website and download it, all the PowerPoint presentations. So it is easier for them to understand, and because when they are watching it on the YouTube again, so when they have the PowerPoint presentation along with them, then also they are understanding it easily, and they are saying that it is helping them to give the exam as well. So from whatever has been taught in classes in last days, these classes also we will conduct the questions. And friends, one more thing, I would like to say that we will conduct exam on 16th and 17th. Test will be open for both the dates, Saturday and Sunday. So any of you who are attending these classes, you can appear for the test. And for the test demo also, I will share separate video for that, and it will be uploaded on Studycafe YouTube channel. That will also help you in understanding how you can give the test. Now I would say thank you, like to say Sangamji to say a few words, and then we will close our today's session.
Thank you, Deepak ji. So I want to express my sincere thanks for coming, you sir, and presenting a very beautiful session, which was very interactive and almost one of the wow sessions, sir, as in earlier session held, sir. So
thank you so much. My pleasure. Thank you.
Thank you very much.
Thank you
Thanks a
so
lot,
much.
sir. Thank you very much. Thank you,
My
Khanna ji, for coming.
Thank you.
And thank you, everyone.
Thank you. God bless you. Thank you.
Thanks
All
a
the
lot,
best.
sir. Thank you, sir.
Thank you.